Russia's government has just stepped in to rescue its own oil industry. A major subsidy scheme that was due to be cut has now been restored and expanded. Moscow says it's about protecting consumers, but the real reason runs deeper. Refineries are under pressure, exports are down, and sanctions are tightening the noose. So the Kremlin is spending billions to keep fuel flowing and to keep its economy from cracking. Russia's fuel crisis is growing, and this emergency bailout shows just how bad it's become. Hi, welcome back to the channel. In today's episode, I want to talk about what's going on with a subsidy plan that the Kremlin was originally intending to cancel, but has now had to do a complete U-turn and reinstate it. And not just that, it's actually had to extend it. So it's now spending more on this subsidy scheme than it was previously. And the fundamental reason for this is the ongoing problems in the Russian oil industry that are being caused as a result of the drone attacks on Russian oil and gas facilities. Now, if we start off by having a look at what this scheme is, it relates to what's called damper payments. Now, you may not have heard of damper payments, but this is basically a fuel price stabilisation mechanism that was created by Moscow. So if you're a refinery that's privately owned in Russia, then obviously you have the option of either selling your refined oil products such as gasoline, diesel, kerosene, all of those things into the Russian market, or to export them overseas. And if you're looking at maximising your profitability, you will go for the best possible price. And generally speaking, the best possible price will be in the export markets because the Russian prices are lower than you'll see elsewhere. So in order to avoid shortages and problems in the domestic market, in 2019, the Russian government introduced these damper payments that basically are compensation to the refineries. They're making the difference up between what they would have earned in the export markets and what they are earning in the domestic markets. So Russia wanted to make sure that domestic supplies stayed strong and wanted to encourage those refineries to keep supplying Russia rather than just sending everything overseas. If you have a look at this table, you can see the difference between the prices. So these are the prices in 2025 for the export of Russian oil per tonne, and then the domestic price, and you can see the subsidy gap. So you can see that back in April 25, export prices were $720 per tonne. The domestic price was only $520. So that left a gap of $200 per tonne. So the Russian government was basically making that payment to all of the refineries to keep the supplies coming into the domestic market. And you can see that over the past few months, we've actually seen export prices rising, and the latest prices in November are sitting at around $800 per tonne. However, the domestic prices haven't increased at the same rate. So domestic price is only up to $570. So the differential now is actually $230 per tonne. So the differential has got larger. So what that means is that the Kremlin is having to spend more on this subsidy system. So that was the reason why they initially announced that they were going to phase this out, that they wanted the refineries to basically fend for themselves. They weren't going to keep paying them to supply the domestic markets. But obviously the problem with that is that then if those refineries may decide to start exporting all of their products. So on the 12th of October, the Kremlin announced that it was actually cancelling the plans to remove the subsidies. So they will remain in place now until at least May 2026. And the reason why the Kremlin did this, well, firstly, they recently introduced an export ban on all gasoline products and some diesel products. So from a refinery's point of view, they're now being forced to provide all of their finished products for the Russian markets. And as a result of that, they will now be earning less for those sales. So this subsidy will make up the difference for all of the refineries. And the reason why Russia wanted to do this is because they were concerned that shortages were starting to appear in various regions. If you follow the channel, you'll know that we covered that in a recent video, that some consumers are actually being limited in terms of the amount that they're allowed to buy when they go to a service station. And the root cause of all of this is the drone strikes that have been taking place over the past few months. Ukraine have now targeted all of these oil and gas facilities. They know that by taking them out, it will cause Russia major problems. They'll lose huge amounts of revenue, and so may bring about some form of peace deal. That's the plan anyway. And All of this is coming at a time when the Russian economy is already struggling because it's got high interest rates, high inflation, and growth is slowing down. So, this is coming at a bad time for the Kremlin because it's having to dig further into its reserves to make these payments to all of the refinery businesses at a time when it's spending a lot of money on the war in Ukraine and it's not receiving in as much cash from the sale of all of its exports. This chart shows the fiscal deficit and how much Russia has been spending on fuel subsidies over the past 5 years. So, the fiscal deficit is basically the difference between what Russia is earning from all of its taxes and what it's spending. So, back in 2021, which was the year before the war in Ukraine started, the fiscal deficit was 1 trillion rubles, which at the current exchange rates is around about $12.5 billion. And included in that were fuel subsidies of 1.2 trillion. So that's how much Russia was paying to all of the refineries to keep the supply going to the Russian market. And 1.2 trillion is roughly around about $15 billion. Now you can see that over the past 4 years, the fiscal deficit has increased in every single year. It rose to 2.3 trillion in 22, 3.9 trillion in 23, 4.3 trillion in 24, and this year it's projected to be 4.8 trillion. However, it could actually be higher than that because that's the latest projection, but things are slowing down rapidly in Russia. And if we look at the cost of the fuel subsidies, they have also increased in every single year. So the increase to 1.8 trillion in 22, 2.6 trillion in 23, which is more than double what it was before the war started, 2.9 trillion in 24, and this year it was estimated to be 3.3 trillion. And that's at the current exchange rate around about $41 billion. So that's a massive increase from the 15 billion back in 2021. However, that 3.3 trillion rubles was taking into account the fact that this subsidy was due to end. However, as you've just heard, the subsidy is not only not ending, it's also being extended. So the actual terms of it are being improved for the refineries. So it's likely that that fuel subsidy figure will increase significantly. It could be as high as 4 trillion rubles by the end of 2025. And this is coming at a time when Russia really doesn't have a lot of spare cash to be spending on anything, let alone subsidies. And if we have a look at the split on the budget for 2025, you can see that the biggest single item is defence. So 13 trillion rubles are being invested into defence, which is around about 40% of all of the expenditure. That is a huge number. When you compare that to the rest of the West, where it would certainly be in single digits, it wouldn't be anything like 40%. Social spending is the next biggest category at 7.3 trillion rubles. That represents around 22%. The third biggest expenditure is education and health, which represents around 13% of the total expenditure. And fuel subsidies and energy support is coming in at number 4 here. So it's the fourth biggest expenditure and represents around 10% of Russia's budget. So this is a major problem for Russia because it doesn't want to be handing over cash to all of the refinery owners just to keep them supplying the Russian economy. However, if they don't, then obviously the other option would be to export all of those products. Now, at the moment, there is an export ban on, so these companies actually wouldn't be able to export the product. But I guess the risk is that those businesses decide to actually cut back on the amount of fuel that they're refining rather than diverting all of the existing supplies directly into the Russian market. So to encourage them to keep the supplies coming into Russia, the Kremlin is having to pay them these subsidies, but this is starting to hurt the Russian economy. And this table, which shows the amount that Russia is earning from its export duties and mineral extraction tax, proves exactly why Russia is struggling right now. And this compares the year-to-date figures. So you can see that in 2024, oil export duties, so the amount of tax that the state was taking out of all of the oil exports, was 7.9 trillion rubles. This year, it's down to 6.1, which represents a fall of 23%. That is huge. Gas export duties in 2024 were 3.4 trillion. Currently, they are 2.5, which represents a 26% fall. Now, you may be wondering why the fall isn't larger. Well, actually in 2023, the fall was significant. So we're comparing a much lower level in 2024 with the current levels. If we were comparing 23 against 22, we would have seen an enormous fall here, probably around about 80 or 90%. But 26% is still significant. And the mineral extraction tax, which is charged on all of the companies that are producing the oil, so they're taxing both the producers and the exporters, that was 10.2 trillion in 2024. Currently, it's 8.6, which is down by 16%. So overall, in 2024, the Kremlin pulled in 21.5 trillion rubles so far, compared with where they are this year. It's 17.2 trillion. So that represents a like-for-like fall of 20%. So Russia's income is down significantly. So increasing the terms of this subsidy is really going to hurt the Kremlin right now. So what's the summary and conclusion today? Well, I wanted to post this video because yet again, we're talking about something that's happening in Russia that's not really making mainstream media. You're not hearing reports about the damper payments. I'm sure most people have never actually heard of damper payments before now. But these things have been going on since 2019, when Russia acknowledged the fact that refineries could make more money from exporting finished oil products rather than selling them into Russia. So to avoid shortages and problems in the domestic market, it decided that it would make up the balance. It would make payments to those refinery businesses to enable them to keep supplying the Russian market. But over the past 5 years, the size of those payments has got larger and larger. Back in 2021, it only accounted for around about $15 billion. Today, it's over 40 billion and it's likely to continue increasing, particularly due to the fact that Russia is actually running short of these sort of products. That's why it's introduced an export ban to stop all of those refineries from being able to export gasoline. It wants to divert all of those gasoline products into the Russian market. So this is going to cost the Kremlin a lot of cash over the next 6 months to keep this scheme in place. And the reason why these problems are occurring are multiple. Firstly, we've got the drone attacks on all of the refineries themselves. So the refineries have seen their capacity fall to around about 60% of what it was previously. So that's a huge amount of volume lost for all of those businesses. But in addition to that, we've also got the sanctions, which are limiting which markets those refineries can actually sell into. So the refineries have got less product anyway. They would like to export that product because that's how they can maximize their value. And as we've talked about before, if you're running an oil refinery, it is a very high fixed cost business. You have to pay for all the facilities, all the fuel, basically all the people, keep everything operational. Even if your volumes are falling, you're going to have to keep most of the facility, if not all of the facility, operational. So you see a fall in revenue, it comes straight off your bottom line. So Russian refineries are hurting at the moment. They are seeing all of this income disappearing, and some of them will be posting losses. And the Kremlin has stepped in now to save some of these businesses by saying, we will give you some money as long as you keep supplying the domestic market. Now, actually, when you turn that on its head, the fact that Russia has imposed an export ban, these refineries actually can't export because they would be going against the decree from the Kremlin. So they wouldn't actually be able to access the export markets even if they wanted to. But to trade off against that, the Kremlin has decided that it will make these payments. But the problem from Russia's point of view is it's coming at a time when Russian economy is already struggling. Its income is down. We saw the tax figures have fallen significantly and the fiscal deficit is increasing. So Russia is spending a lot more than it is earning right now. And by making these subsidy payments, more cash is going out of the door. So this is making things harder for Russia at a time when the drone attacks from Ukraine are increasing. So it's likely that these refineries may encounter more problems over the next 6 months. So their capacity could go down further. And we've already got shortages in the domestic market. So I talked about it in previous videos, the fact that certain areas have actually got stations where they don't have any gas, or you're limited to maybe 2 or 3 gallons of fuel when you go to fill up at the pumps. So Russia is really struggling right now. And the fact that it's had to cancel the planned scrapping of this damper payment system and not just reinstate it, but actually extend the scheme to make it more attractive to refineries tells us that there are serious problems going on in the Russian market right now. There are major problems with these refineries, but the biggest problem of all is that Russia is seeing its income going down every single day, and it's spending as much as it was. In fact, it's spending more because it's having to increase schemes like this. And all of that tells us that the cash is starting to dwindle, the National Wealth Fund is running out, and at some point, Russia is going to hit the buffers. It's going to run out of cash. Nobody knows exactly when that will be, but it could certainly be within the next 6 to 12 months. So hopefully you've enjoyed today's video, you found it useful, informative and thought-provoking. If you've liked what I've said, then please give me a thumbs up. Thank you for watching this video all the way through to the end, and thank you so much to everyone that is already a subscriber. But if you're not, please hit that subscriber button. And thank you to everyone that's supporting me. If you've come over to Patreon recently, where you can see my videos early and advert-free, thank you so much for that. Thank you if you're a YouTube member or you've sent me YouTube super thanks, or if you've bought me a coffee or signed up as a Buy Me a Coffee member. Thank you so much, and here's something to put a smile on your face.